So I'm a big believer in the social media space long term, but I look beyond the headline names like Meta or Facebook, if you still call it that. Two of my favorite social media companies that I own are a company called Pinterest and a company called Nextdoor. Now, Pinterest, most of you have probably heard of. Ticker symbol is PINS. Nextdoor is a company that most people who own homes are at least familiar with. A lot don't realize it's a publicly traded company. Its ticker symbol is Kind, KIND. They were a SPAC IPO, one of the few that I like as a long term business. Take a minute and click subscribe to my channel before we get started if you don't already. And please take a look at the link you see on your screen. It's a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So let's start with Pinterest, just because it's the better known of the two companies. Pinterest is, they call it a visual discovery engine, where unlike most social media platforms where you go to interact with other people, Pinterest you go primarily to find things. So they've recently started to pivot their strategy toward e-commerce, and it makes a lot of sense. Pinterest is a place people go to find things that they're eventually going to buy, so why not include themselves in that process? They recently hired a new CEO. He used to be head of commerce at Google. And so far, it's going pretty well. We just got the company's first quarter numbers, and they're back to growth. Revenue is up 5% year over year. Their user base is up 7% year over year. 463 million total users throughout the world. The strongest growth is outside of the US and Europe, which we'll get to that, why that matters in a minute. And it looks like their e-commerce progress has been good. The, the click-through on so-called shoppable pins is up 35% year over year. There's a 30% increase in trackable checkouts for merchants who uploaded catalogs to Pinterest. A lot of progress for their targeted advertising platform, and just a really encouraging development in e-commerce. It hasn't really trickled down to the bottom line just yet, but that's something to watch over the next few quarters. The bad is that their average revenue per user, ARPU, is down 1% year over year globally. That's not totally surprising. Pinterest is an advertising driven business after all, and the advertising industry has been very weak. With a recession being predicted and weaker consumer spending, companies are hesitant to pay as much for advertising as they were. So it is creating kind of a weak advertisement or weak advertiser market. But Pinterest is still doing okay. They're up. Their monetization is doing well. I wouldn't call it great, but they're still they make most of their money from a relatively small percentage of their user base, and that is their US users. Their average US user makes $5.11 in revenue for the company in the quarter. The average user from outside the North America and Europe only brought in 10 cents, and that's where the majority of Pinterest users are. So there's a lot of monetization opportunity overseas, and that's really what I'd like to see them lean into in the quarters to come. I think if they can kind of narrow that gap, their international monetization might never get close to where the US is, but if they can narrow the gap a little bit, it would be a big, big deal. Um, Another kind of concern I have is that their costs are higher across the board, which makes sense. They're investing in building out their e-commerce and things like that, and their advertising platform. So it's going to cost money. It should hopefully be a temporary cost increase. Another thing I'll be keeping an eye on. And because of that, their adjusted earnings are down 65% year over year. They're still profitable. So it's important to point out that out of the two companies I'm going to talk about, Pinterest is the profitable one. So Nextdoor is the one that's not very well known, and for good reason. It's a smaller company. It's more recently public, but the numbers look pretty surprisingly good. The stock rallied after earnings, unlike Pinterest, which fell after those earnings I just talked about. And the reason is their user growth has been fantastic. Nextdoor grew its user base. Remember, they're the homeowner and neighborhood focused social network. They grew their user base by 16% year over year, and it actually accelerated from the fourth quarter. And they attributed a lot of this growth to their investments in artificial intelligence that is designed to create kind of targeted and relevant and personalized user experiences. And it looks like it's paying off well. The bad news is revenue was down 2% year over year. just like I mentioned with Pinterest, the ad market has softened a little bit. Um, and its average revenue per user is down 16% year over year. So it's getting hit a lot harder by the weaker advertising market than Pinterest is, which makes sense. They're kind of a secondary platform for a lot of advertisers, and they focus a lot on local advertising as opposed to national brands and things like that. And they are not a profitable company. They lost $34 million in the quarter on a GAAP basis, and adjusted EBITDA was negative $22 million. Both of those numbers were better than expected, but it's still not a profitable company. They have a lot of runway to get there, though. They have $575 million of cash and investments on the balance sheet. They expect to return to growth later this year in terms of revenue. So they're expecting the advertising market to stabilize and then the growth of their user base really fuel revenue growth. They expect 4 to 6% revenue growth year over year in the second quarter and better margins. So both of these companies have a ton of potential. Nextdoor is clearly the more speculative play out of the two, but there's a lot of money to be made if they can execute well. If just consider the leader in the sector, which is Meta, or Facebook's parent company, their quarterly average revenue per user is roughly 40 times what Nextdoor's is, and about 10 times what Pinterest is bringing in. So there's a lot of room to increase monetization if Pinterest can successfully accomplish e-commerce integration into their platform and really realize that potential. They could narrow the gap between them and the leaders significantly and really boost profitability. And if Nextdoor can just really start showing a path to profitability, it could be a big winner. This is a sub $1 billion company, a micro cap stock, and it's a very well-known platform for being such a small company. These are two companies I think do have 10x potential over the next decade or so. And they're two that I own quite a bit of in my portfolio and plan to hold for a while. 3, 2, 1. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 395% as of April 27th, 2023, and are measured against the S&P 500's returns of 118% as of April 27, 2023.